Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single-family homes all the way up to 600-plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Happy Sunday. Welcome to the show. I want to thank you for tuning in this morning. My name is Mike Harrison. You're listening to the Lifestyles Unlimited Real Estate Investor Radio Show. We've got a great show planned for you this morning. I've got a guest that I'm bringing on the show, and this guest has done quite well for himself in both his profession and his real estate investment portfolio. What's unique is that this gentleman has the foresight to begin his real estate investing at a rather young age. And we don't see that too often around here. Most of us start later in life. Another interesting point is that this gentleman is in the banking industry. And that's interesting to me because most bankers I know are stock market diehards. Another point I'd like to share as we get started. Not only is this gentleman a successful Lifestyles Unlimited member, very successful in his profession, but he's also smart enough to convince his boss that they needed to become a vendor of Lifestyles Unlimited, and that in itself is another huge success. And we'll get to that later in the show. But this person absolutely has the Midas touch, in my opinion. I feel everything he touches turns to gold. Daniel, welcome to the show. I want to thank you for joining us this morning.
Thank you. Thanks for having me. I'm pretty excited to be on.
Excellent. Well, I saw you at the case study the other night. And coincidentally, I'd already kind of pegged you to come on the show prior to that, but that was a great case study that you did. How'd that feel? What was that like from your side?
It was the beginning of it was a little bit stressful because I was planning on doing it at my office, but the internet connection was pretty bad. So I had to, in the middle of the whole thing, I had to go rush home and then connect in, try to make sure I got the lighting right and everything, and finally, I was able to get on right in time.
Oh, wow.
It worked out. It was a little stressed out, but it worked out.
Okay, so some last-minute changes there. And for you listeners that don't know, we do case studies here at Lifestyles Unlimited every month. And essentially what we do is we highlight the achievements of our members. And we typically have someone who just started in their real estate investing path, and then we have somebody who's intermediate, who has a little more experience, who's done it for more years and has more doors, and that's where Daniel fit in. And then we always follow that with somebody who's done an apartment community investing. So if you want to see any case study, send me a link, send me an email. I'll send you a link, and you can attend our case study and see real people, real results talking about it. But Daniel, you're a banker by trade. What attracted you to real estate investing?
So I actually started off in real estate right out of college. After I graduated from the University of Colorado, I went to the business school there, and then I moved to Denver, and I got my real estate license in Colorado and started working for Coldwell Banker. And, I don't know exactly why I chose that. I think because real estate ran in my family, and I had seen kind of some of the successes of my cousins and my uncle, one of my uncles. And so I figured that was a good place to get started, although, in hindsight, probably I should have started out working for somebody on with a paycheck that young. But I was eager to kind of get going. And so I had represented people as a realtor on the buy and sell side for a little while. And then I realized, I saw, just talking to other professionals in the business, kind of seeing that, you got to get invested at a young age.
Yeah.
I was, at that younger age, I was able to take a lot more risk, and it just was a good path for me at that time, I think. But
no.
Not an easy path for sure. But I decided to try and jump in. And this was like in 2005.
Yeah.
Right around 2005. And so things were really hot at that point. in the market. So, financing was super aggressive. Leverage was super aggressive across the board. I mean, all kinds of people were, were getting in the market. I was seeing the success all around me. And so that's I actually had a really good mentor, Glenn Whitman, who's actually still in Denver. He's running a kind of like a We Buy Ugly Homes type of business.
Right.
So he's a wholesaler, I guess you'd call him. And we ended up buying, we found a pretty cool location in Denver that was two duplexes that faced each other and kind of shared a common front yard.
Right.
And it was a 1940s building, so, pretty old. But I think he negotiated the sales price, and so I bought one half, he bought the other. So that gave me a little bit of comfort, getting in on my first deal with somebody that I could trust. But, we decided to use separate contractors for the renovation portion, which was quite interesting because it was ended up being pretty stressful for me because I didn't have any oversight. I didn't have anybody kind of guiding me on the good vendors to use. And I was, using people that maybe I was really looking solely on, outside of one vendor, I was looking at the price. And
so you chose them based on price, and you're kind of learning as you go through that. I guess you were stumbling through it, but you still had cash flow in the deal, right? Was that what attracted you? Was it the cash flow or the opportunity to create value and grow the value of the investment?
I think the value aspect was really important to me, but I needed a place to live. And so as a first-time home buyer, I was able to get really good financing terms on a duplex.
Right.
And in hindsight, I probably should have bought a fourplex and this is what I tell my customers.
You don't know what you don't know. So, Daniel, they're pushing us out. But when we come back, I want to get into that fourplex that you purchased in Colorado Springs and talk about that particular deal. My name is Mike Harrison. This is the Lifestyles Unlimited Real Estate Investor Radio Show.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. Now, let's get back to your map to financial freedom.
Welcome back to the show. I want to thank you for tuning in. My name's Mike Harrison. We have a guest on the show this morning, Daniel, and Daniel started real estate investing at a young age. As soon as he came out of college, saw the light and saw the potential in real estate investing and began investing at that time. And if you have any questions for Daniel or myself, our number is 855-497-4335. That's 855-497-4335. Give us a call. Or if you're tuning in on podcast, you're catching this show at a later date, feel free to email me, askmike@luinc.com, askmike@luinc.com. So, Daniel, when we left off, we were talking about that first duplex that you purchased and some of the difficulties with it. Yet that duplex eventually gave you the ability to continue your real estate investing. Tell us how that duplex enabled you to do that.
Yeah, so at the time, Countrywide was out there giving 100% loan-to-value home equity lines of credit. So I had built about $200,000 of equity in that duplex, and I was able to tap into 100% of that equity. And I used that line of credit to give me the money I needed as down payments for other houses in Denver. So I was able to kind of split that between doing some fix and flips, some properties that I had bought, renovated, and resold at a profit. And over, the course of the next kind of 3 years, I was able to build up a decent amount of liquidity to allow bigger and bigger purchases and expand my portfolio. So at that time, I had built up about 4 or 5 different properties, and then I found a deal in Colorado Springs. Kind of right before that, I had decided to go back to school when '08 hit, and that was kind of a mess, I think, across the board, where I was starting to see the values of even my properties going down tremendously, which was pretty scary when you're looking at your net worth dropping so drastically. What I learned through '08 was things bounce back. And in real estate, they really bounce, at least in Denver, they bounce back pretty quickly. I mean, within a couple of years, I saw some of the values of my houses drop by 50% and then double in value over the next year or two. So,
let me jump in real quick. Yeah. You had residents in your properties, though, so you were able to navigate through because they were still rented out, or what was the story on that?
Absolutely. So I had, that was the key thing to it, was I actually had cash flow through the whole process. So even though the values were going down, I still had the cash flow. I was still, making my debt payments, and so
you didn't have to sell.
No, exactly. I mean, I was never in a position where I had to sell, and I think that's what was so great about it. I was buying in areas that were workforce housing. People always needed to live in these homes, and so they were really always rented. I mean, in '08 there was a little higher turnover, but the fact of the matter was I was still able to keep up with my debts, and, it was just the management portion of it was a little bit more tricky. But, eventually that whole, seeing what happened in '08 really made me realize I wanted to go back to school to learn more and kind of get into the commercial side of things. But I didn't want to let go of doing my own investment, because I know that, I just knew that working for somebody else was not going to really benefit my net worth the way that investing in real estate was going to. So I ended up going to the University of Denver, and I got my international MBA and a master's in real estate. And the real estate program at University of Denver is really amazing. And that got my foot in the door with a distressed and opportunistic debt fund in Denver, and then eventually I became an investment analyst at Northmark Capital, which specializes in commercial, like the sourcing, originating debt for commercial real estate deals. So I was able to underwrite billions of dollars worth of deals and see all kinds of deals in all asset classes, but having my real estate investment on the side. And I had, at that point I started getting, good managers to take over the day-to-day operations. And I sold a property, and I had enough funds to buy a fourplex. I found a really good deal. I bought it for like $360,000 in Colorado Springs. And that was 4 units. There were 2-bedroom, 1 bath each, about 800 square feet each, and great location, overlooked. It was like at the edge of a cliff and had mountains all around. You could see all of downtown Colorado Springs. So it was, it was still kind of an up and coming type of area. But the cash flow was great on it. And so I jumped into that. And then eventually I sold that recently. I held that for about 3 years. About 3 years, I think. And I just asked my manager, the property manager, what, he thought he could, what would it sell for? And I was thinking he was going to say around 450, 500. And he's like, oh, I think I could get you between, 550 and, 560. I said, well, definitely put it on the market. And then, a week later, he came back with two offers over asking, and I ended up selling it for $560,000. And so I didn't really have to put a lot into the property either. So it was a huge win for me. And that then, I 1031, deferred the taxes on that by buying more property in Dallas. In Terrell, I bought an 8-plex, 2 4-plexes. So I was able to get residential financing at 3.2% on 2 4-plexes that shared. So it's really an 8 unit complex.
How'd you find that property?
So I actually used a lifestyle broker, a realtor. Her name's Anna Ortiz, and she was absolutely amazing. I mean, probably one. And I know this sounds, like I'm overselling her, but I really believe she's one of the best agents I've ever worked with because she cared so much about the transaction. She was on top of everything, and I don't always see that with realtors. So, I mean, she really took ownership. And I really needed that because, I've got a full-time job as a commercial lender at a bank. I needed her to be on top of everything. So It gave me the comfort I needed to get the transaction done. She negotiated, we did the inspection. I had Greenworks do the inspection, and they found some items. So we were able to negotiate the price down a little bit and really see what kind of issues what deferred maintenance items that needed to be done. So I could put that cash aside to make sure if those ever came up, I could get those fixed immediately. Yeah, I mean, so far it's been 100% lease. It brings in $5,760 a month in gross rent, and I bought it for $635,000. Well, plus actually a little bit less after the concessions, but say $635,000. So the cash on cash return on that is about 9 or 10%.
Warning. Listening to the Lifestyles Unlimited Real Estate Investor Radio Show will change your life. We will teach you how to create wealth and passive income so you can be financially free. And now, back to your host.
Welcome back to the show. I have guests on the show who has done quite a bit as far as creating passive income and wealth, just like they said in the byline at the beginning. I've got Daniel, and Daniel's a very experienced real estate investor. He's a highly educated real estate investor. He's a preferred member here at Lifestyles Unlimited since 2018. He has 7 passive apartment deals where he's invested in as a passive investor, 17 single-family doors. He's a senior vice president at Guarantee Bank and Trust, a degree in real estate. But Daniel, you moved to Texas. You found Lifestyles Unlimited, and obviously there was something there for somebody who had done as much and knows as much as you did to see within the program. What was it about Lifestyles Unlimited that attracted you?
So there was 2 things that happened about the same time that kind of signaled to me that I should join. One, my cousin Leah Slaughter, who owns OmniQ Realty, she's also a Lifestyles vendor.
Yep, I know Leah. She is a go-getter. Absolutely.
Unbelievable. I mean, she is one of the most successful women I have ever met.
And, I didn't know y'all were cousins. That's funny.
Yeah. And I grew up with her sister. So, so she said, hey, you got to connect with these, this lifestyle group. They're really well connected. They're doing a lot of deals. And she was saying that more, to me as a banker to go out there and kind of drum up some business. And then I went to a case study, and Charles Ho, who was a mentor at the time for the multifamily mentor, he was talking, and I got super motivated, listening to him because it all made sense what they were saying. I mean, it wasn't hyperbole. When I talked to Charles, it turns out that he knew another cousin of mine. So, who, an older gentleman who is very successful in the commercial real estate world. So, Good
Lord, your family you're loaded with real estate investors. Okay,
yeah,
I'm seeing the path now.
Well, so I talked to my other cousin about Charles, and he's like, Charles is the best.
Charles has helped me personally quite a bit. He was my mentor. Still is. I can call Charles today if I had a question. Great guy.
Yeah, I mean, it was great. And so I ended up, I ended up helping Charles with a deal, and I was like, you know what? There's enough here going on. I want to join. And I did that 2-day with Dave Fisher, and everything he was saying was right on point. And I'm a very skeptical person, so I was trying to poke holes in everything, but realistically, there's nothing in that seminar that isn't true. And I think it's all stuff that people need to know going into this. So, that's what got it started. And I knew I wanted to go in the preferred level right away just because I think I didn't really need to start off with single family mentorship. I really kind of wanted to go right into the syndicated side of things, but also make sure to have connections, a mentor for my single family investment stuff, but also having a mentor for the multifamily side. And it allowed me, I wanted to make sure it was going to be a win-win. I'd be able to bring in business for the bank I work for because it's really important that I focus on, continuing to build my portfolio of loans and deposits for the bank because it's a really great bank, and I think it's a good relationship, I think, between the two, like-minded companies. And so, that's how I, got involved in that. And I went to the expo in Houston and met so many amazing people. And it's turned out to be quite a good investment on my part. And hopefully, for Lifestyles and the bank I work for.
That's incredibly impactful coming from somebody that has the experience that you have, who started investing at a young age, and yet has a formal education in real estate and real estate investing, that you came to Lifestyles, you looked at it, you saw the program, and you said to you still found value, you understood, and you still continued to learn. That's, I don't think our listener can realize what a huge statement that is coming from somebody with your experience. Well,
for me, when I started off so young and really, I was not always surrounded by the best people. And, I think for somebody to be able to get into real estate and be surrounded with such a high quality of people that they can genuinely trust is really hard to find. And Lifestyles really provides a really good community. It provides accountability, which I think is the number one element. Accountability for the vendors, accountability for the members. And so,
it's about protecting everybody because it is such a cold, cruel. There's people out there that are they're not even putting their own money in the deal and they're taking money from everybody else. And
and there's so many hidden fees in their deals. It's unbelievable. And I just don't, and there's a lot of deals that I can't even get done with them just because I just don't feel ethically like I could even deal with that just because of how
on the lender side,
their investors. On the lender side, I don't want to deal with those syndication groups because they're hurting their members are really the members' interests are secondary to the limited partners in the deal are really their interests are secondary to the general partners, to the ones running the deal.
For our listeners out there, did you pick that up? That's a banker saying he doesn't want to do a deal, reads through 700 pages of what's in there, and he starts seeing what's really going on. That's I like to hear that, Daniel. That's interesting.
Well, that's what's interesting about Lifestyles, right, is like they have the white paper, they've got their guidelines, and if you veer from that, you've got to state it, which I think is great. And so...
Dale will metaphorically chop your head off if you try to steal from the passive investors. I mean, he absolutely will come down on you. And it's a beautiful program, and accountability is what it's all about. Absolutely.
And a 30-year-old program. I mean, let's not forget that. The fact that Lifestyle's been around so long. I mean, that is some staying power. There's a lot of groups that come and go, but not a whole lot that there's a lot of them that really just make it through the good times and don't survive the bad times, but Lifestyles has been through the cycle.
We have, and we've got just a few seconds before they kick us out on the other side. But Daniel, do you have any thoughts? I hear people say all the time that DFW is overpriced, that property is overpriced. Do you have any quick thoughts on that?
I thought real estate was getting overpriced 10 years ago, and here we are, still going up. I read at the Federal Reserve Bank in Dallas, they were talking about affordability in DFW, and they said that affordability has actually improved and this was third quarter of 2020, but according to the National Association of Home Builders, they have a chart that tracks it, and they were at 52%. So anything, the 52% of the homes that are for sale are affordable, and 63% in Fort Worth are affordable for the median income family, which if you compare that to any other large city, we are still have plenty of room to grow. All the jobs are coming into DFW. Incomes are rising. Our unemployment rate now is continuing to drop after COVID. It's just, everybody I know that stayed in Texas has really done well.
Yeah, plenty of room for expansion. We're going to come back after a short break. My name is Mike Harrison. This is the Lifestyles Unlimited Real Estate Investor Radio Show.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. It's time to turn up the volume and fine-tune your passive income plan so you can create the lifestyle you've always wanted.
I appreciate you listening this morning. I have a guest on our show, a very successful real estate investor, a lot of insight, a lot of education. And Daniel, you had mentioned that you went to the expo in Houston, and what a great expo it was, what a great experience for you to see. And I want to throw out for our listeners, our expo is going to be here in Irving, Texas. It's September 3rd and 4th. That is Labor Day weekend. Make plans now to attend. This is the largest event of its kind. It's September 3rd and 4th in Irving, Texas. If you want more information, it's Lifestyles Unlimited Expo 2021. Lifestyles Unlimited Expo 2021. I guarantee if you attend this event, you will be glad you did. And if you want to save $97 off the price of admission, I have a promo code. Go there, go to the website, lifestylesunlimitedexpo2021.com to buy your pass. And when you do, enter promo code MIKE, M-I-K-E, and that's all capital letters, M-I-K-E, and you'll save $97. So, Daniel, not only are you a member, a successful investor, heck, half your family's in the business now that I find out on the radio show. I had no idea. But let's talk about that vendor side. Tell us about Guarantee Bank and Trust and what you do there for our members.
So Guarantee Bank and Trust is a 100-year-old Texas community bank that started in Mount Pleasant. And they've got a tremendous focus on, customer service and building long-term banking relationships. So we're not a deal bank. We are really focused on bringing in investors that are going to be a good fit for us long-term. So we're looking for very good, high-quality borrowers. And we decided to partner with Lifestyles Unlimited in 2019, I believe. And in 2020, we were just named North Texas Multifamily Vendor of the Year.
Congratulations.
So I'm very honored to get that. Thank you.
Yeah.
And it's because we were able to get a lot of deals done for the members, both traditional cash-out refinances, financing single-family conventional homes, but also commercial deals. So we've done several bridge loans for Lifestyles syndicators, first-timers even. And in a lot of cases, they don't need additional KPs. They may qualify on their own when they think that maybe they don't. And we're continually trying to expand our presence in the Lifestyles community, just trying to get our the word out because I believe with all my heart that Guarantee Bank and Trust is a tremendous resource for the members. I try to be a tremendous resource just as a guide. Oftentimes when people reach out to me for the first time, I'll give them spreadsheets that I've been working on for years, just how to underwrite deals, trying to formulate ways on how they can improve their finances, what's a good path to get from point A to point B. So I'm in it for the long run, and I hope to have a lot of these customers in the long run. So, I mean, if anybody's out there interested, my
throw out your contact info.
Perfect. Yeah, my email is dzale@gnty.com. My name is Daniel Zale. So dzale@gnty.com.
Excellent. When you went to your boss and you said, hey, I want to join Lifestyles Unlimited as a vendor, what were his thoughts initially?
He's like, well, let's see if we get results. I mean, he's tight on budget anyway, so it's always hard to get people to pay out a monthly fee, without getting those results immediately, I think.
Right.
But he's been really good, really understanding. I think he's seeing the number of leads that we get. Not every deal works for us, but I think over time I'm starting to see an increased activity, increased interest, which is great. And recently I did talk with management about getting more aggressive on rates and terms and trying to maybe position ourselves in a more aggressive way to get more deals done, but in a safe way, because ultimately we're a conservative bank and we have to protect, our depositors. So,
that's important.
It's really important. Yeah. And we really don't want to put borrowers in a situation that's going to set them up to fail.
And we're conservative on our end. Lifestyles Unlimited, exactly. Very, very conservative. We do not recommend crazy lending practices by any means. We want all of our members, when they do a deal, to have some equity in the deal to protect them from those hard times should they arrive or when they arrive. Just like when you went through 2008, your properties were cash flowing, and so you were able to hang on. But, I think that's important that you are conservative, Daniel.
Yeah, I mean, and actually, I'm going to be reaching out pretty aggressively to other members that are in my network to figure out exactly where are their needs right now in this market and how can we be competitive. So again, that's just another example of what Guarantee does to try and add value to our customers. And even if it's just depositing, opening up a checking account with us, that begins the relationship. And for me to when it comes time that you're looking for a loan, a lot of people don't understand this, is when you have an existing relationship with a local bank, it's going to go very far when it comes to getting future deals done. It's going to be a lot harder when you're looking for a bank and you've never had that relationship. And I think that was really apparent when COVID hit, when the shutdowns happened. I think there was a lot of people looking for loans, and it was difficult to find, but we were lending to our customers the entire time. And in fact, we were reaching out to our customers saying, hey, what do you need? How can we help? And we changed payments from, principal and interest payments to interest only payments. Some cases we lowered the rate just to help them get through. And I thought that was really outstanding on the part of our management to make that decision proactively.
It really is a relationship business. A lot of people don't understand. They say, well, I've got a strong personal financial statement. I've got great credit. I should be able to walk in and just pretty much tell you my terms. And that's not always true. Again, if they know you, if your banker has a relationship with you, knows about your business, that's even bigger than just looking at a credit report. Is what is this person's business? What is their investing style? Where are they on their path? What's the future for this person? So that's important. It was good to hear you say that. So, Daniel, let me ask you this. I have an instinctive feeling that what you've accomplished so far is really just the tip of the iceberg. I think you're on the path for some big endeavors. What's next for you on the investment path?
So, I mean, for me, what's important is I'm focusing on my job as a banker foremost. And so any deals that I get into, I have to make sure that I've got good management, I've got good people in place, that it's not going to take a lot of time away from where I want to focus it primarily. But I think, for me, the syndication part of it as a passive has been a really good avenue because it really does not require, all it is upfront underwriting to get in the deal, and then there's no work thereafter. So that's been a great thing for me. I mean, I recently just got great news on one of the deals I'm invested in. They got an offer at $1 million more than what they bought it. It's gonna, it's projected to bring in a 46% return, cash on cash over a 2-year period, which is fantastic. So,
wow.
Obviously that may not be the case with every deal, but I think if you know how to underwrite, if you follow the steps that Lifestyles puts in front of you, and you watch the courses and you really teach yourself how to underwrite, and you've got good resources. Even run your deals by a banker, run your deals by your mentor. There's a lot of avenues to really protect yourself and get into good stuff. So I think that's where I'm moving to, with the ultimate goal of having enough passive cash flow to eventually retire. And, I'm even thinking about maybe I'll move to Central or South America and have a bed and breakfast and work on some music production and live the lifestyle.
That's what passive income does. You're buying your time back, and then you get to go do what you want to do. And really, those passive deals, I'm in quite a few of them. I'm focusing on growing that side, but there's nothing more beautiful than literally opening that mailbox, and I got a check on Friday. It was so nice. You open the mailbox, and boom, there's a check. They're not always direct deposited, which it kind of takes a little bit of the fun out of it. You look at your account online, you're like, oh, that property paid. I guess that's what that check is. But when you see that check,
yeah, right. Now you got to go find another one to replace it.
Yeah, it's a lot of fun. I mean, you wave it in. I waved mine at my wife. Hey, babe, got another check. And, she just kind of smiles. But really, there's no work to it. Well, Daniel, I really want to thank you for coming on today's show. That was a lot of fun. And again, why don't you quickly just throw out your contact info if someone wants to reach out to you?
Yeah, so again, my name is Daniel Zale, Senior Vice President in the Dallas office, and my email is dzale@gnty.com.
The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.